Hello everyone and welcome to my YouTube channel. So today we'll be solving May June 2020 variant 31 question number 2. Okay, so this question is related to the manufacturing account. In the manufacturing account topic, you need to remember the format of manufacturing account and the income statement. Well, there is no difference in the income statement format, but you have to remember it. So let's start with the question. Here we have the question number 2. Yes, AD Limited sells watches and clocks. Watches are manufactured by the company and clocks are bought from a local manufacturer. Here they have given the balances that were extracted from the books of ED Limited at 31st December 2019. Sales revenue, purchases, plant and machinery. Then they have given in the other information, manufacturing watches are transferred to the trading account at production cost plus a markup of 20%. This will be used in the manufacturing account after we calculate the manufacturing cost. Again, this will be used in the manufacturing account after we calculate the manufacturing cost in the manufacturing account. Then they have given some information which will be required during the question. So let's start with the question. So first question is state the meaning of the term work in progress. Work in progress means work in progress means goods have been manufactured, goods are being manufactured but not finished yet. But not finished yet. Work in progress means goods have been manufactured but not finished yet. This means they are in the process of being manufactured. Now the second question comes, how the work in progress is being valued. So here we have to go in the concept of the IES. So as per IES 2, they are valued at a lower cost they are valued at a lower cost at NRV. So what is NRV? Net realizable value. NRV is net realizable value. Let's move on. Now comes the main thing, manufacturing account for watches for the year ended. You have to read it carefully. It is for watches, not for what we say. What was the second thing they gave? Yeah, clocks. It is for watches, not for clocks. So we have to look for only the amounts that are given for watches. So let's start. First of all, we need two columns for the manufacturing account. One for totals and one for calculation. Let's start. So first thing that comes to the manufacturing account is the opening inventory. The value of opening inventory is 12,500. We will take the raw material inventory, not else, because we are preparing the manufacturing account. 12,500. Then we will take the purchases. The value for purchases of raw material is 132,700. Well, to solve these questions, you have to remember the format and memorize it. 132,700 are the purchases. So, do we have anything else? Yeah, closing inventory. Closing inventory is 13,400, which will be also recorded. Sorry for my handwriting. This is a little weird, but closing inventory is 13,400. So anything else? No. So this is we calculated the cost of raw material consumed. Cost of raw material consumed. Let's see the amount of it. The answer is 131,800. 131,800. Now comes the direct wages. Direct wages, how much we have? 168,000 is the direct wages. Direct. Yeah, don't mix it with expenses. This is the cost. This is not an expense. 160, 1,680,000. Sorry, we had 1 0 extra. Yeah. So now we can calculate easily the prime cost. And we have to subtract this direct wages. The bracket means that we have to subtract this direct wages. So the answer for the prime cost is 299,800. 299,800. Let's go now. Now we have to record the manufacturing overheads. Manufacturing overheads. So manufacturing overheads are given here. That has the value of 63,500. 63,500. And then we have anything else? Yes, we have the plant and machinery accumulated depreciation. So this will also be recorded. We do not have for office equipment. We have for office equipment, but we will not record as this is not related to the manufacturing. We will not record it in the manufacturing account because it is not related to the manufacturing. So let's go. Plant and machinery depreciation. Let's calculate it. Plant, machinery. I'm using short forms because of the space I have. Plant and machinery depreciation. So let's see the calculation that we have to do. What is the cost of it? It is 320,000. Where we can do the working. I'm doing the working here. We have the cost of 320,000. We will subtract the accumulated depreciation 184,000 because they have given the reducing balance method to depreciate at 25% per annum. Minus 184,000, and we will multiply by the percentage given What is the percentage given? 25%. Here it is given 25% per annum using reducing bonus method. 25%. So let's calculate it. 34,000 is the final answer. So here we get the plant and machinery depreciation, 34,000. Now comes the rent and rates, as it is given here. Rent and rate 68,000. Do we have anything? Rent and rates? Yes, we have little complex things. It is in the transaction number 3/10. Prepaid rent and rates are at 25. Prepaid rent and rates at 31st December 2019 were 4,000. Rent and rates are allocated between manufacturing and administrative expenses in the ratio of 3:2. So rent and rates are actually 68,000. Rent and rates are actually 68,000. We will subtract the prepaid rents at transaction number 3 that is written by 4,000. We subtract prepaid from the expenses and add accrued. 68,000 minus 4,000, and they have to apportion it 3/5. So the answer we get is 38,400. So rent and rates is 38,400. Here, the first section of the manufacturing account is finished. Now we will come for the work in progress. Yes, so opening work in progress is given 9,000 for the watches. Opening work in progress is given 9,000 for the watches. 9,000 is the opening work in progress. 9,000 is the opening work in progress. Closing work in progress for the watches is that's inventory at 31st December 2019. Watches work in progress 9,700. Closing work in progress 9,700. So it will give us 700. After this, we have calculated the manufacturing cost. We have calculated the manufacturing overhead 63,500, plant and machinery depreciation 34,000, 38,400 add 9,000 minus and 9,700. So we get the manufacturing cost of 435,000. Yeah, do not forget to keep this. 435,000 is the manufacturing cost. This is little easy question because you do not have to do much of the working, but if you remember format, this is easy. Now we have to add, I think so 20% markup is also given. Yeah, so this is the tricky part of it. Manufacturing watches are transferred to the trading account at a production cost plus markup of 20%. So first of all, we have calculated 435,000 here. Add 20% markup, or we can also write profit. So 430 will calculate the 20% of 435,000. That gives us the value of 87,000. Now we'll add 435,000 and 87,000. That gives us a value of 522,000. That is the transfer to the trading account. I'm writing income statement. That way we can write air trading account. So our first part of 7 marks is completed. Now let's go to the second part. Calculate the gross profit for the year ended 31st December 2019 on the sale of watches and clocks. So it's for 2 marks, but indirectly they are asking for the income statement. Trading section of the income statement. Use a table below to present your calculations. Let's start for it. First of all, very first thing that we need is revenue, or we can also record it as sales. So let's see the revenue for the sales revenue for watches 628,000, clocks 332,000. 628,000 and 332,000. 332,000. Do we have any sales return? No, 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 no. No, we do not have any sales return. But if we have a sales return, we will subtract it from the revenue. We then go with the less cost of sales. I'm writing cost of sales. I'm writing COS rather than cost of sales because of the space. The most common thing that is always given, opening inventory. That is mostly given in the question. If anything in the of the income statement not given, we have to work back by calculating the markup and margin. Opening inventory do we have for both? Yes. For watches finished goods cost 40,000 and